Okay, let's see if everything is on and ready. It definitely looks like. So, good Monday, happy Easter, Passover, Ramadan Mubarak, whatever you guys celebrate. Best to you and yours, and a good week to everyone. Happy April also. Too many things to start the week with. I'm Vladimir Ribakov from Home Trader Club, and on the coming months until end of April, I'll be with you sharing my technical analysis, trading opportunities, and everything I know about trading and all the knowledge I gained on the last 15 plus years. So I'll start with a big thank you to Eightcap for making this possible. And I'm very happy to be here. And I hope you find what I have to share with you useful, interesting, and something new to learn as well. So in today's video, I will be going over 4 instruments that I have on the list. It should be very interesting week. Before that, the 4 instruments, it's slipping on my mind: the euro dollar, pound franc, gold, and NASDAQ. And then, as I said, it should be interesting week because after the non-farm payrolls that were published on the last Friday, it will be interesting to see how the market play with the number, digest and observe these numbers. What happened to be is that the job market in US still pretty solid. That's the bottom line. The numbers are as predicted. They are high. Maybe just the average payment, the average income dropped a little bit, but the numbers are still very, very, very solid. So it will be, as I said, very interesting to me to see how the market absorbs that, because such numbers, usually what happens is they put the pressure on the Fed. The Fed pays a big attention to the numbers coming out of the job market as a main factor to the decision, go and hike the rates or not. And we all know that the whole world, believe it or not, is yet after what the Fed has to say. The US still has a very significant weight in how the rest of the world are making their decisions about the interest rates. And from my point of view, I'm not yet confident and sure that we saw the top. We might see that going even higher, with the main thing in mind: fight the inflation. With that being said, there are several interesting technical opportunities that I would like to go over in this in today's meeting. And as I said, it will be the euro dollar, pound franc, NASDAQ, and the gold. I'll start with the euro dollar. So if we go to the very higher time frame, we can see here a very interesting scenario. The long-term trend is without a doubt bearish on the euro dollar. It's a pretty strong a sequence of lower highs, lower lows, without really anything changing. Right? The sequence is still there. However, look what happens after the bounce, right, at the bottom of the last quarter of 2022. Pretty sure it was October. It was September. September, October, it was where the bottom was set. The bounce from 0.95, if you think about it, the last time the euro dollar was on below the parity level was all the way in 2002, 2001, all these levels. So for the first time of revisiting this zone, the bounce was very impressive. Now, take a look how the structure on the euro dollar usually goes. Okay? After massive, from my point of view, massive is, first of all, big move. Second, fast move. Fast move identified basically by the angle. Okay? This could be a slow move. This is a fast move. Okay? So the sharper the angle is, the faster the move is. Now, take a look every single time the euro did a sharp move down. especially on the monthly chart, the corrections there were for a while, okay, or straight, right, or a range, but they took time. And this is where we are at the moment. So from my point of view, the euro dollar did not say its last bullish word. And taking this into consideration, there is a good chance that after some bounce to the bottom, the euro dollar will try to go and make another push to the upside. Okay, so from the higher time frame, I go to the lower time frame, start and I put it all together. And here is a very interesting situation on the weekly chart. So connecting this, the very simple flow of lower highs, lower lows. Here is what we can see. The last bearish move since the beginning of 2021 to the end of 2022. Look how 2023 goes so far. Okay? After the sequence of lower highs, lower lows, we flip. The high is broken, then the next high is broken. After this, let me just put a different shape. After the break of last high, the market drops down and never yet retested the previously broken low. And usually the market works in a simple structure, right? When the high and the lows are flipping the trend, the lows would be retested, the previously broken lows. Okay? Then the previous high would be eventually, we can predict when and how, but eventually would be retested. It's usually the move from swing to swing in sort of rotation in a trend. And the logic is the highs are created by who? By the buyers. It's a reason it becomes a high is because the sellers take control, and that's the highest price the buyers manage to achieve. And eventually these levels, they go and being retested. Classical supply and demand, or zone of control, or zone of trend change. You know, every trader can use different names. The logic will remain the same. And taking these things into consideration, we can see that this low was not yet retested. On the other hand, on the way down, the previous highs also were not yet retested. Right? So we are currently in between. And that's what makes me think, okay, after a flip of the trend with the analysis I did before about the monthly chart, it looks still bullish. So for me, buy the dips here is still the plan. The question is how big the dips will be. And one of the scenarios is that we will see something like a little range here for some time and then the final push. The other scenario that could eventually happen, I don't see the reasons for that for now, but could happen, is this little longer ABCD to retest the previously broken low, as I mentioned before. Okay, with all these factors in mind, for me the plan would be still after the buys, after the drops, buy the dips, and going down to the lower time frame. This is where usually the opportunity starts to build up. The daily chart, first leg up, creates without a doubt trending structure. That's 3 at least, following higher highs, higher lows. Correction, okay? It's very arguable ABCD, but it's still two waves of format, and then we broke the high and regained the momentum. So with that being said, the market has several important supportive zones. Okay, as I always love to work with, previously lows, right? And the sequence, that's the zones of the demand. That's where the buyers again manage to take the control. So these are the levels we will need first of all to pay attention to. The next important level is all these lows. Okay? Level of demand. Buyers really manage to hold these zones and push it up, right? So this would be the first zone of interest for me. What does that mean? The market reaching the area, that's where I start looking for my opportunities. How? That's where I love to go to the lower time frame and see the same logic of trend change. On the lower time frame, I will want to see the trend changes, right? Correction, lower highs, lower lows, and then flip. So this is the first sign, of course. And on a daily chart, we might start to see the candles, right? After making several lower highs, lower lows, we flip and we start to create bullish candles, sequence of higher highs, higher lows. Like, take a look how it happens to be. Every time we make the drop, you start to see sequence, higher highs, higher lows, right? Another drop and then higher highs, higher lows. These are the signs that really buyers are trying to take the control. So this is the analysis for the euro dollar. I have first zone, once again, a zone of buyers. I'm looking to join the buyers. I'm looking where the buyers took control. Okay, buyers take control. It's where the pullback down stops, and they manage to flip and start making the sequence of higher highs, higher lows. That's where I know, okay, buyers really are interested in this area. Probably they have a reason. Let's try to figure out the reason and to join this momentum. So this is the first zone, and this is the second zone where I'll be waiting for the euro dollar. Why there are two zones? Because marking a level, it's not enough, right? You can theoretically set a pending order, but who can guarantee you that this level will hold? A pending order could be fantastic if the market holds and bounces. But pending order also comes with the risk because there are no official signs. You are expecting, predicting, hoping in some way that the level will hold. Okay, that I love to personally see the swing highs, especially when it's a higher time frame, because we have enough time to wait, anticipate, and then take a smarter, wiser decision. So this is the euro dollar. Feel free to share any questions if you would have, or your views in the comments. I have it on my other screen. I can always have a look at it. Next one on the list would be the pound franc, also a very interesting opportunity. So I'll start with the higher time frame, like I usually do. By the way, on the last Monday, I explained a little bit about my trading style, the trading technique, how I love to work. I love to work with multi-time frame, synchronization. That's why I usually start with the higher time frame, not always as a monthly, but in that case I do because that's longer term trades. But I love to start with the higher time frame and then I drop lower. I love to try to synchronize the levels and the analysis in the same direction. If I manage to find these instruments, that's what I'm looking to trade. So going to the monthly chart of the pound franc, what we have here is a beautiful long. It started before 2000, so that's a very long bearish trend, or a very long time when the pound is losing its grip. We all know and saw what happened with United Kingdom and their economy on the last decade, with all the ups and downs they experienced inside, and with the Brexit and everything. So technically speaking, it's over a 2-decade of drop. But the interesting part that the last about 6-7 years here, okay, we can see the market is trying to find a bottom. That's a rounding bottom, okay, in technical terms. Okay? After a very sharp move, right? What starts to happen then, we get slower and slower and slower. That teaches us what? That teaches us that the the sellers are losing slowly their grip, their momentum, and buyers starts to show their interest. Okay, they start to reject the zones. And the very interesting thing here, that while the market is making the lower highs, lower lows, the indicator makes higher lows. That completes a bullish or positive divergence. Then we had several months ago a beautiful candle pattern with an engulfing and ranging since. And this is where I want to focus. This range, take a look how it looks like. Okay, after the move down, right, going down to the weekly chart, we got sequence of lower highs, lower lows. Look where the bounce happens from, right? Next, slightly higher, but next to the parity level, that one. Very flat zone. And here is the RSI going over sold conditions. Every single time on a higher time frame recently that we saw that, and here the RSI oversold, here is almost oversold. The reactions were big, and they usually were in 2 waves or more. So right now we got the first wave. Now, in my anticipation, there should be a second wave. And that's what I am looking to trade. So right now, after the first massive move, the market is ranging, which is makes sense. They are looking for their next direction, I can say. And that's where I start to find the opportunities very interesting, because there are two scenarios to work with the ranges. Option one is, because of the higher time frame analysis, buy around the bottom of the range becomes a very good technical opportunity. Okay, so if we manage to get one more drop, you can see this spike here. That's a zone of buyers, right? It's become interesting, right? We got it to the bottom here. Aha, that's a very good zone to start looking for the buys, especially if the higher time frame would have its impact and make the push to the upside. But the other scenario here is take this range, right, and go with the breakout. If the breakout happens, very likely the second leg will complete. And then we can start plotting the falling resistance lines and the next support resistance on the way in order to find the target zones. So with this analysis in mind, dropping down to the daily chart, this is my next time frame to trade. I'll plot the levels once again, the lines again. Okay, we connect the lower highs, connecting the lower lows, and here is our ongoing range. So there are two scenarios, as I mentioned before. Scenario one, we are retesting the bottom or anything close to the bottom, right? Because not always the final retest of range reaches the official bottom. Many times it stops around the 10, maybe in some cases up to 20% deviation. So if you take a look on the whole distance between the range, right, 10-20% deviation from the bottom could be a very good zone to start looking for the opportunities. Okay, so this will be the first scenario here for the buys, and the other scenario, more favorable for me, but the market will decide how it will work, is if we get the breakout, retest, and then start the push all the way to the next significant level. And the reason I mark this as significant level, because look what happens here. A lot of actions. That's where a lot of volume was set. Okay, what does that mean? A lot of transactions went through this area, almost half a year during 2022 before the next move down happened. So a lot of fight between the buyers and the sellers here. This is why this zone is next massive one. This was the one before, but it was already retested. So if we manage to break and go through, the next level would be here. And that's around the 120, potentially all the way up to 124 or so. So these are the two scenarios I am following the pound franc. And I think this one has a massive potential. Next one on the list would be the NASDAQ. A lot been said about all the indices. So was the bottom set already or not? We can argue about it. We can talk about it for a month or maybe even more. Naming and covering all the possible subjects, all the why yes and why not, to save you precious time. From my point of view, the bottom was not yet set. Somehow, I hope I am wrong, but I will explain why. Fundamentally, of course, I belong to this category of or group of people who think and believe that in order to get a good period or another very good decade, first of all, there should be some challenging period. Because for a very, very long time, since the 1990s or maybe even before, if we, of course, exclude all the challenges and the troubles and everything the world went through, but for a very long time, the economy around the world was just going up. And it reached some sort of place, I would say, where people really think the money is growing on trees. if I can phrase it this way. And a lot of the newer generation, I'm not dinosaur, I'm almost 40, but people that are younger than me, right? They look at money in absolutely different light. So I believe that there should be some challenging period that will balance or straighten the way that we as society, or especially the new generation, treat money, or they develop their level of respect to money, commitments and everything, to careers, to families, and so on. Everything here starts to be like instant. Everyone believes in instant, here and now. I think it lost the balance. I might be wrong. Okay, as I said, I might be a dinosaur in some eyes, but this is my personal view, and that's why I think that the last word of the bears was not yet said. However, not quite sure that it's ready to round two of already. And that's why I have two scenarios for the NASDAQ. The ideal scenario for me would be if this high up to the previous high zone would be retested. If we manage to see here this area reached, holds, rejected, I think we should be looking for a massive sell. And this is why I have two scenarios. As I said, one would be the buy towards this area, the other one would be sell. So right now we are in some sort of a corrective structure. It might look like two waves movement here. So it also, as I said, market is not perfect, right? And we might have 10% deviation. So if we take the distance from the bottom to the top, 10%, well, we're somewhere there between 10 to 20%, right? Very good chance the next round will start already. But as I said, I'm not quite sure about it. So two scenarios in mind. Here is the first one. According to the first one, I would be looking to get this drop. And like in the case of the euro dollar, back to the previously created low zone, okay, and then the next zone. The zone where the buyers show their interest. And from there, if we manage to see some good rejection, potential rally, final rally, as I said before, towards the previously broken, the previously created swing high on the weekly chart. From there, on this zone, as I showed before, I will be looking for the next big sells. So this is the first zone of interest for me. This is the second zone of interest for me, to look for this rejection and a rally. Okay, this will be the second zone. Look for this rejection and a rally. The other scenario, since we created here a sort of a double bottom, is this ABCD, right? If the market goes below the ABCD line and start making lower lows, it might be a convincing sign that sell these rallies should be the plan. And with the weekly analysis, remember, the second big weekly leg down is expected. This is where it could get interesting for a long-term sell. And if it happens, then I would expect to see an absolutely new low being retested. And how low can it go? Well, you judge. Look where the next buyer zone. Okay, so I'm not here to predict any black periods or anything like that. I'm just following the chart. And as I said, I believe there should be one final rally before the move down. But it might start even before the levels of expectations I currently have. So that's my two scenarios I follow for the NASDAQ, both short-term and long-term. If it flips the trend to the downside and makes the lower lows on the daily chart as I just showed, I'll be not interested in looking for the buys anymore, and will switch my view to sell the rallies. And the final one for today would be the gold, which so far, following our plan from the last Wednesday, we were covering that in our midweek session we've had here, making the pullback I don't think anything should happen, anything big should happen with the gold to the downside. For me, it's still by the dips. I still expect the gold to go for the ATH all-time high, and until it will stabilize itself. But on the short term, take a look what happens here. This is a indicator of mine, Bollinger Band, I use, and it shows where there were extreme rallies on upper or Bollinger Bands without significant pullbacks. And every single time when we got this bearish cloud, or right, the red cloud there, we can see how strong the reactions of the market eventually happened to be. This was one case where it didn't make any reaction, right? But after the second cloud, the drop down was all the way to the first zone. So I think there is a good chance that for some time the gold will make this correction to the bottom of the Bollinger Bands. We have a rising supportive line on the daily chart. We have zone of buyers here as well, right? So I believe that for some time we should see some slowing down movement, and from there, very possible to go and look for the buys to create the all-time high. And the reason I still believe the gold did not say its last word, well, first of all, besides the technical, also fundamentally, of course, is that we should see the third wave eventually completing itself, and the monthly creates higher high versus lower highs on the MACD to complete a very long-term bearish divergence before the next drop will take place. That's why I am still bullish on the gold, and once we see these pullbacks taking place, I believe buy the dips is the direction here. So these are the four, right? Four instruments I wanted to share with you for the beginning of the week. I really find them interesting, as there is a good synchronization between a higher time frame and the lower time frame, and the potential, if the levels I mentioned, if they manage to hold, the potential here should be absolutely fantastic. So that's it for this video. If you would have any questions, then feel free to reach me out in the comments of this video, or reach me out personally in Home Trader Club. I'll be more than happy to answer any questions. Thank you very much for your time watching this video, if it's live or if it's recorded. Thank you to Eightcap for making such events happen. I absolutely love it. I think it's fantastic. And once again, the very best to you and yours. Happy Passover, Easter, Ramadan, whatever you guys celebrate. Enjoy your time with your beloved ones. And thank you very much once again for being here and for your time. All the best. See you soon. On Wednesday, we have our midweek session. So join us there, and I'll see you live. Bye for now. See you soon.